Hey guys, welcome back. Drip Coach here with Drip and Farm for property where we don't trust, we verify and operate with integrity and transparency. Today we got a clip that's from Simply Bitcoin, but the clip I want to play is actually from Mike McGlone, who's a Bloomberg senior analyst, senior commodity strategist. And it's fascinating. Someone with this title could actually say this on camera. And what this says to me is we are still super early. I know you've heard that phrase before. I've said it multiple times. Even with Bitcoin sitting at around 110K and holding that line tightly, you have these gurus from TradFi that still don't get it. And I've mentioned this so many times, and shout out to the homie Matt, talking to him about this. And none of us really get it until you just keep digesting the Bitcoin orange pill narrative. And the reason why people like him don't get it, and no shade against him, but it's because they've studied all of the information from the TradFi system. That TradFi system is built as a control system, as Jeff Booth says, that is built from the narrative that inflation is necessary and inherent, and that stealing your economic energy is the only way for it to sustain itself. So you'll have people like this share their feedback of 40 years of studying essentially brainwashed material. That's the easiest way to say it. And it takes a lot of digging for that light bulb to eventually come on. So without further ado, let's play this clip. And then he even doubled down and put it on X. So we'll look at the post. But let's see if you can pick this out. It's 3 minutes worth of context, and see if you can pick out the one piece that just should rub you the wrong way if you've been orange pilled.
The systematic risk of Bitcoin is like nothing I've ever seen. I fully expect it to do what it always has in history, to have a normal 50%, maybe 60, maybe 70, higher or higher drawdown. And now you see an example of how extreme it is. But those two words, Bitcoin and treasury in the same sentence, is a complete oxymoron. When I think
So what happens to these tickers once Bitcoin loses to zero?
Well, exactly. It's the thing. That's what happens. They get stopped out, and then it's time to buy Bitcoin. Maybe we'll get lucky this time, but this is all predicated. Remember, this space helped get that president elected. It was a bit of a Faustian bargain, and these things typically don't work out so well. That's why I point out is also, remember who started this? Michael Saylor at Strategy. I mean, I was very close to him. I interviewed him in 2022. It was our first time that Bloomberg had an open event, and I agree with him. That's when he jumped on board in 2020. He jumped on board with Bitcoin. But the main reason MicroStrategy back then jumped on Bitcoin was his software company didn't have a lot of upside potential. So that was fine. An alternative. It worked great. He doubled down. He got a 10x, and now he's doubling down. And he actually has been taunting Warren Buffett for free and heavy in cash. David, it's the most significant example of lesson you learn in the trading pitch is never mess with the market gods. Thou shalt not tempt the market gods. And he tempted the market gods, and I wish them luck. But this, I think I'm going to look back in history and write in my book, this is an example of peak bubble. And here's a problem I also have with Bitcoin. There's 21 million other cryptocurrencies. People like Tom Lee have come over to Ethereum. Like, okay, well, there's another million you can rotate at some point. Rotate it. There's unlimited supply of, and only in 2009 there was only one. Now there's 21 million or 20 million. So they're commodities, and they're expensive, and people are buying them at the highs. The lesson in commodities is they go down because they went up, and they go up because it went down. So I think we're just going to head towards that going down phase, and it's going to be pretty enduring. And things like Dogecoin are going to have to drop a couple zeros, and Bitcoin might drop a zero. Now, to end all that thing, the U.S. stock market has to stay elevated. It's August. We don't have a minor correction. But for now, it's early days. That's why I think the end of this year is going to be so telling. And that's why by the end of the year, if the U.S. stock market is just up 5%, everything, the dominoes tumble. And so I think there's good indications for that. Gold's figuring it out.
McGlone thinks Bitcoin.
All right. So did you catch that piece? I know it might have been a lot of nuggets dropped in there, like him saying Bitcoin could draw down 50, 60%, Bitcoin could lose at zero, taunting Warren Buffett saying he's heavy in cash, and him talk about not tempting the market gods. But the specific piece, if you didn't catch it, I'm going to find it again here.
21 million other cryptocurrencies. People like Tom Lee have gone over to Ethereum. Like, okay, well, there's another million you can rotate at some point. Rotate it. There's unlimited supply of, and only in 2009 there was only one. Now there's 21 million or 20 million. So they're commodities, and they're expensive.
So again, if you've been orange pilled, that should really be like nails on a chalkboard. And it's fascinating that this guy doesn't get it. Let's look at his tweet. This may also be Bitcoin's problem. It's capped 21 million, but competitor cryptocurrencies are not. There are 21 million now, according to CoinMarketCap, compared to just one in 2009. So he's basically saying everything, they're all the same. There is no difference. He even stated in his own words that there are 21 million other commodities. He's a senior commodity strategist. There is no way that the bulk of the tokens on CoinMarketCap are considered commodities. The CFTC has not greenlit that. SEC has not greenlit that. They've only greenlit a handful as commodities, specifically Bitcoin and Ethereum. Now, granted, they haven't labeled the others as securities, but you don't have to be in this space for like a hot minute to realize a fucking meme token is not a commodity. That Bitcoin is very different than my Flapjacks token that I created. Like, holy hell, this dude, again, a senior commodity strategist at Bloomberg Intelligence. That is just baffling. So it goes back to my statement before that they just still don't get it. There's so many smart people in the space and they don't get it, and we are super early. We are able to see the difference between these other 21 million tokens. Yeah, I don't doubt that there are 21 million other things that you can throw money at, but there's only one that has been at the top of the food chain that was created in a decentralized way with no issuer that we can point a finger at. There's no one controlling it. It's governed by math. It's secured by energy. It is all over the freaking globe. It's gotten the green stamp of approval from nation states, from the government, all sorts of stuff. Like, no other token comes close. So how can you say that there are 21, like, who cares how many, but how can you lump everything in the same category? That is fascinating that this guy, says that on whatever TV show that was, and then again doubling down on his actual statement here. So back to what I was stating, and again, shout out to my homie Matt. It's just like, yeah, you have to keep digesting this over and over and over again until you get it, so that you can see the difference and understand that all of the information that everyone else has, and even what you and I both were filtering our information through, and what we've learned in school and what we study on the internet, is all through the narrative of preserving the control system. Every single financial book, economic book, everything was written on a control system, not a global free system. Now, granted, when we're on the gold system or gold standard, and then you had countries back in the day, and the Romans and all that stuff that specifically had gold before they started clipping coins and all that. Yeah, those economic principles were definitely built on sound money, but it wasn't global. It was only within that specific country. And this is the first time that we have a global free market that's built on sound money. So therefore, everything you've learned has to go out the window, because I can interact with someone in Zimbabwe, in New Delhi, in New Zealand, all through the internet, and with a open source protocol bounded by energy. That's never, ever, 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 ever been possible. So all I can encourage everyone, and that's why I keep making content, is like, dive into Bitcoin, understand, so you don't make this same mistake that Mike McGlone is making, to understand that there are differences, and so you don't make the same mistake that I did in my original journey of, Bitcoin's too expensive, let me go get one of these other tokens because they're all the same. That's not going to work. That will end very badly. However, right now, you might get lucky because there could still be some altcoin pumps, and you could take that roulette spin and put it all on 17 and get lucky, but the odds are not in your favor. So orange pill yourself, understand how Bitcoin is built, why it stands on top of the food chain, and why it will be here forever, and why it is where you should put the bulk of your capital, not financial advice. But if you want to be here at the end of this cycle and create generational wealth, or stop throwing money down the fiat Ponzi trap, then there is only one outlet, only one sound money protocol that is decentralized, open, secure, and bounded by energy, and that's Bitcoin. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya.